Welcome, everybody, and thank you for joining us for our virtual session, Tidbits on Your Credit and Improving Your Credit Score. My name is Barbara Agan, and I'm the Director of Member Engagement and Education with ABCO Federal Credit Union. Our presenter is Bill Mitchenfelder, Business Development Manager with ABCO, and I will now turn the meeting over to Bill.
Thank you, Barbara. Good evening, everybody. This is just a walkthrough on tidbits on your credit and improving your credit score. There's a lot of myths out there, and we thought it was the perfect time to address it and to help everyone through these times to improve your individual credit, which in the long run will improve your life and the cost of as we see things increasing nowadays. So let's get to it. First part of credit comes up is, how do you establish good credit? The simple one: pay your bills on time. This is going to be a theme throughout, but it's pay your bills on time. Do not fall behind. That's step number one. 2, check your credit report. This will go a theme you'll see again throughout this presentation, but we'll show you the site to go to that's approved, where you can get a copy of your credit reports once a year for free. Very good to check. Do not max out your credit cards. Part of the calculation that comes up with your credit worthiness or your credit score that we'll talk about is your available balance. If you have 2 or 3 or 4 credit cards and all of them are maxed out, so if you have a credit limit of $2,000 as an example, and every month you hit $2,000, well, you don't have any available credit. So one, you have a high bill to pay every month, which hurts all of us when that happens. But more importantly, it affects your credit score. And then don't fall for store credit cards. They all advertise them. They all even catch you at the register when you leave to get a certain discount. If you look at the store credit cards, they have incredibly high interest rates. They're very common to be well over 20%. And they know what's going to happen is, while you like the 10% or 20% discount on the new pair of pants you're buying, you're going to keep that balance and buy from them again, which they like. But more importantly, they're going to make money on the interest that they're charging, which is at a very high rate. You'll wind up paying maybe quadruple what those pants originally cost you. Now, what is credit? It's more than a plastic card to use to buy things. It's your financial trustworthiness. And more importantly, it is how financial institutions look at you. When they look at that, they see how you operate and how you have the ability to make your payments on time. Now, why do you need credit? This comes up sometimes. I know there's some financial advisors out there far smarter than I am. They'll talk about don't have credit. Well, if you want to rent an apartment or you want to buy a house, have a mortgage. If you want to buy, lease, or even rent a car, if you want to buy something online, or even looking at career opportunity, it's essential that you have credit. You need to show that you exist. Even in renting an apartment, they're very reticent to give you any sort of lease agreement if they can't see how you pay your bills. I know there's even insurance companies out there, and auto insurance, that rate drivers based on what their credit worthiness is. Not saying it's right, but it's something that they do. So you have to guard against that. That's why we need credit, and we need good credit. Now, ways to damage your credit: late payments, not paying your bills on time. Even if you pay them slow, pay them late, that will show up on your credit report as a late payment, and that'll reduce your credit score. Missing payments. Can't skip a payment. Can't pay a car loan. I'll pay in August, I'll skip September, I'll jump back on October. Now, if you have a skip a pay program with ADCO, where we allow that to a degree on promotions, that's fine, but you can't arbitrarily just miss payments. Can't be irresponsible with credit card use. Again, if you have a few credit cards, if you run them all up to the max, you're paying a high amount of money every month for those bills. It's your existing credit line is virtually zero, so that affects your credit score as well. And then owing lots of money or overextending, mortgages, car payments, credit card bills, Hulu, Netflix, and go on and on and on. And the bills add up and they affect your credit score as well, and your ability to make that monthly payment and have peace of mind. And finally, bankruptcy. Bankruptcy could be on your credit report for 7 to 10 years, depending on the type of bankruptcy that you filed. And that makes you uncredit worthy, and you'd be impossible to get credit anywhere until that's cleared up. Now, some tidbits. Older cards, don't close them. You want longevity in your credit file. Some people say, listen, I paid off this credit card, so I'm going to cut it up, call them, closing it out. The problem with that is the longer you have credit, that reflects as a good score on your credit report. If you close it, you lose that, and that could affect your credit score and bring it down. It takes discipline. What I would recommend, if you have a card and you've paid it off, unless there's some crazy yearly fee attached to it, put it in the safety deposit box if you don't want to use it, but at least have it so you know that you keep that longevity. Debit cards are not reported to the credit bureaus. Now, people who don't have credit cards or have applied for them, many people have the debit cards attached to their savings checking account. Great device to use, great to go into Wawa, great to pay for gas, et cetera, but those transactions on that debit card are not reported to the credit bureau. So even though it's not overextended, and you obviously are, there's no bill to pay, and that's why it's not on your credit report, you don't get any credit for that, so it doesn't help your credit score. And paying off negative debt removes it from your credit report. No, it can stay up to 7 years. Now, if you have a debt where you're contacted by someone to pay and work out arrangements, obviously you have that responsibility to take care of that. However, by paying that off, it will reflect that it's paid, but it will not drop off of your credit report. That's still an obligation. Don't let anyone tell you that, well, if you pay me, then, that will come off and your credit will look great. No, that's not the case. Then a few more tidbits. Salary, child support, alimony, and other income affects my credit. No, income is not used to calculate your credit score. It is your debt on loans that comes up on that. As well as some other items we'll talk about later on. Another myth out there is married couples have a joint credit report. No, there is no such thing as a joint credit report. Each individual has their own credit score and their own credit report. You may file, as an example, for a mortgage jointly, and both will be looked at, but there's not a combination or a joint credit report. And the single most important indicator of credit worthiness, paying your bills on time. That's number one. I know it sounds so simple, but I'll say it again. Pay your bills on time. Now, advantages to good credit. Lower interest rates. Many lenders have risk-based lending. So based on your credit score, you have A, B, C, D rate. The lower your credit score, the higher rate you pay. Advantages of good credit, you get the best or lower interest rates. You have more options. When you apply for a mortgage, there are some mortgages out there that instead of the traditional 20% down, which if we know home prices, 20% is not an easy number to save up for. There are some mortgage programs out there that allow 15, 10%, 5%, 3% down. You simply have the ability to apply to be approved for those if you have good credit. Saves you money. Saves you money in terms of lower rates. A credit card at 8% is a lot better than a credit card at 15%. What you buy on there, if you do have to extend the payments, you'll save money in the long run. Now, the disadvantages, and there are a few more, and they are deadly. Higher interest rates. Everything that you apply for, every credit card, every car loan, every personal loan will have a higher interest rate if your credit score is not strong. Over the course of a lifetime, that will cost you a lot of money. Lack of options. Remember I talked about the mortgage, 20%, it's traditional, then you get the 10, 5, 3% down. Those options simply wouldn't be available. You may still get approved for a mortgage, but you wouldn't go to those particular programs, you wouldn't qualify for them if your credit score is not strong. And you can be turned away. You can be declined. So if you apply for that store card, or if your hot water heater goes and the HVAC guy shows up and he'll go to the plumber and he's going to give you a new one and it's going to cost $5,000. If you don't have the $5,000 and you apply for his easy financing, if you have bad credit, turned away, you're going to be without that hot water heater. And you may not be able to get a mortgage or rent with bad credit because they do run your credit whether you rent or obviously when you apply for a mortgage. Now, this all kind of dovetails into a section regarding credit cards because all of us have them. And what are the advantages of credit cards? It's a safe alternative to cash. Much easier to carry a credit card than carrying $1,000 in cash in your pocket. Builds a good credit history. If you have a credit card, you use it judiciously, which we'll talk about, you pay the payment on time, that will build a good credit history, which will go to make those other loans that you're going to look at, car loan, mortgage, have lower rates. It bails you out of emergencies. My recommendation, which we talk about, would be to pay your credit card off monthly. Use it because you have to establish credit, but pay it off monthly. That being said, let's go back to the issue where the hot water heater goes. It will bail you out of an emergency where all of a sudden you need a couple of $1,000s to pay for that hot water heater that you didn't expect to pay for. Comes in handy. Your obligation will be to try to pay that down as soon as possible, but at least you have that leeway that if emergency comes up, you're able to bail yourself out and get that hot water heater replaced. And it gives you time to pay. Again, if you don't have $2,000 or $3,000 up front, but you have it on your credit card, now you can start to pay that off as you go. Now, some things to know. You need to know what the interest rate is on any loan you have, whether it's a mortgage, car loan, but definitely your credit card. In fact, for those, and I'm sure many of you have store cards, take a look at them and see what those interest rates are. You would be shocked to see how high they are in those store cards. Are there any additional fees? if you have credit, but it has some dings on it, there are credit card companies that will issue you a card, but they're looking for opportunity, and many of them may carry annual fees, high interest rates, transaction fees, believe it or not, that you don't know you have, and it'll actually cost you more than you could imagine on that card. And then how much is the payment when it is due? You have to know what that is. And what happens if I can't pay my bill? Communication. If you have a loan with the credit union, you have an issue, you need to call us. We're here to help. You can't bury your head in the sand and hope it goes away. The best way is to be straightforward and come contact us, let us know what the issue is, and that we're aware of it, and we can take every avenue we can to assist you to get back on course. Now, I put one example here, just a random example. Take a person who charges $2,000 on a credit card at almost 20%, which is not uncommon. And like I said, some of those store cards are even higher. And annual fee, you say $40, could be higher. And they pay approximately over $8,000 over 31 years for that $2,000 charge. Now, remember we talked about the hot water heater? Let's say you have to use it for that, and then you double your minimum payment. That would be paid off in about 3 years. So it's not going to cost you as much or take you as long. The credit card is there for use for your safety's sake, as well as a backup for those emergencies and ease of payment. It's not there as a long-term loan where you just make the minimum monthly payment, because it will never, ever go away. Oh, and by the way, here's another reason why credit cards are superior to a debit card. And I use a debit card, don't get me wrong. Both are great tools to use. Traditionally or typically in a credit card, if the card was lost or stolen and then used, or someone got your number and used it, if you contact the credit card company, typically your exposure is limited to like $50. Now let's take the reverse. Let's say that you have a debit card and it's attached to your savings and or a checking account, and you have $12,000 of combined checking and savings. You've exposed that your entire amount of money, $12,000, to anyone who gets that card. Better to have a credit card where you have a limited available balance, and you have the ability to reduce that if you call it in that it's lost or stolen. And now the tips, that was some of what we talked about. Create a budget. We need to know what you're paying for on a monthly basis. Use your credit card to make small purchases. Show that you're using the card and you could be trusted to have a small loan and pay it off on time, month after month after month. That will do the best to improve your credit. Pay your entire balance before the due date. You don't want to pay interest. I know we're a financial institution, but we're a credit union, and you're our members, and we care about you. The best healthy financial practice is to pay off the entire balance before the due date. Remember the emergency, though, it's there for that when that hot water heater goes. Never lend that card payment to anyone. Do not give your number out. Little side story, my son goes away to college. He had used the card and helped out a friend. And then all of a sudden one day he contacted us and said, there's a payment that doesn't make any sense to me. We said, call the company, have it stopped. We did some research. Lo and behold, he had used the card with a friend, and that friend somehow still had the card number and thought that he could use it again because he definitely needed something. Be careful. Do not lend that number out to anyone. Now, there's something called the Fair Credit Reporting Act. That has been out, I guess, since the 70s, I believe. And there's a couple parts to it. This was designed to protect the consumer so that they know what's going on with their history once we developed credit reporting with a credit score. You must be told if your file has been used, you've been denied. You have the right to know what is in your file. You have the right to ask for a credit score. And now your credit history. We've talked about it. What is all in that credit report? Well, it's a record of your personal financial history. It's a transcript of all your financial data. And as I like to say, the good, the bad, and for some of us, the ugly, it's there. It's your financial report card. It has all your identifying information, name, address, name, rank, serial number, as I used to say. Your credit history, even loans that have been closed, have been paid off successfully. Maybe a car loan that you had and paid successfully, it's still on that report. Public records. If you've been sued, it'll be on there. Inquiries. Buying a car. It's very common to go out and do some car shopping. Every time you go to a car dealer and you get a little serious, the first thing they want to do is run your credit to see if you qualify. They run your credit, that's called an inquiry that'll come up on your credit report. It will reflect and it will reduce your credit score because it reflects that you are applying for multiple lines of credit. Obviously, you're not. You're trying to find the best deal on the car, but the system doesn't know that. It's not dramatic, but it does bring down your credit score a few points. And it also, the credit report shows your collections. So let's say you have a store card and you didn't pay it. Well, at a certain point, if they can't collect it, it will go to a collection agency. And those are the people that will call you every day, send you inquiries, send you letters. They will hit your credit report to reflect that you owe that and it's outstanding. Now, we talked about credit reports. Under the Fair Credit Reporting Act, you have the right to get a copy of your credit reports once a year for free. Charges nothing. So your homework tonight will be go to annualcreditreport.com after this and order a copy of your credit. It will open your eyes, even for those people who've paid your bills on time, typically don't have an issue when going for a car loan, always got approved at the credit union. It wouldn't hurt to take a look and see how you're reflected and how financial institutions see you when they look at your credit report. Now, I've tossed around this term credit score. The most popular and the one widely used is called FICO. It's the stands for Fair Isaac Corporation. FICO score is anywhere from 300 points, being the rock bottom, up to the sensational 850. Credit score is derived when you run a credit report. That's what all the lenders looked at. So the higher the score, the better credit worthy you are. So one, you're more likely to be approved, and two, the higher the score, the more likely you are to get a much lower interest rate. And there's three credit bureaus: Experian, TransUnion, and Equifax, and they've been around for years. Now there may be some questions. Let me bring this up now. Financial institutions look at these three credit bureaus, and they look at your FICO score. There's a lot of consumer products out there now, even some put out by these very same companies, where you can see a credit score. It's not the exact score of your FICO score, but it's close. Why they have different models, we could argue and debate that. Sometimes you could say it gets a little confusing, but based on the type of credit you're looking at, whether you're looking to get a credit card versus a car loan versus a mortgage, financial institutions look at that a little bit differently. Some of those sites you go to that are owned by Experian, TransUnion, Equifax, they're good. They'll give you a lot of information, more than we can cover tonight. But it is not your FICO score. Just remember that. But it is a good barometer and could be a useful tool for you. Now, how FICO scores are calculated. This is a basic formula that they use. 35% is payment history. It's the largest amount. So remember what we said from the very beginning. Pay your bills on time. Nothing can cover for not paying your bills on time. 30% is on what you owe. How much? So in essence, what is your available balance? And are you stretched, overextended? Third, 15% is the type of credit. Credit cards, car loans, mortgages. All of that goes into play, the breadth of your credit and the different types. 10% is new accounts. How many new accounts you have. When you start, if you're younger and you want to establish credit when you get out of school, obviously you're getting a lot of credit card inquiries in the mail. Don't open up 4 or 5 store cards. Don't open up 4 or 5 credit cards. One, if you open up, you're going to run into overextending yourself, paying high interest rates, but you're going to show too many accounts opened up too soon. Then finally, 10% is on the length of credit history. Remember we talked about, if you have a card, you've had it a number of years, it may have a higher rate than you'd normally want. I would say still keep it, use it judiciously, pay it off every month so it's active. But if you had it a long time, I would keep it on file, on your account, on your credit, so that it would go in the plus side for you in terms of the length of credit history that you have. I want to mention one thing too before I forget on credit cards, just a little thing with ABCO, if you call it a commercial or not. You really need to know, as we said before, what makes up your card, interest rate, when it's due, any other fees. Our credit card is fixed rate versus many, if not most out there, or most, are variable rate. When inflation hits, as it has, what the store cards and the banks are going to do, they're going to increase that rate. So if you're paying 12.99, that's going to go to 15.99 because their costs have gone up and they pass it on to you. With an ABCO credit card with a fixed rate, whatever that rate is your rate. Pay it on time, it will never go up. So it's almost an inflation fighter so that you won't be hit as interest rates go up. And there's no fee to do a balance transfer. So we keep it, and there's no annual fee, and there's no application fee. These are all important things when you look at comparing credit cards that are out there. Long term, it will save you a lot of money. And then finally, that brings us to questions. So if anyone has any questions, I haven't looked at the chat room there. Feel free to ask any, and Barbara can hopefully take over here and make sure we coordinate all this. I'd be more than happy to anything.
Bill, we do have a few questions. So, and I think you covered this in one of your slides. The question is regarding the payment of a balance. Is there a benefit to paying the credit card balance early versus on time or paying more than the amount due, like the total balance?
Well, getting into the weeds a little bit, paying it early is nice. It kind of depends on what the calculation is on how the interest is. I think though, if you would shoot to pay it at least on time, you would be the head of the game. And secondly, that second part of, is there any advantage? Yeah, if you pay it off, obviously you're not paying any interest whatsoever. That's the best way to go. If you pay it a little bit late, that interest will be charged by that financial institution.
Yeah, also, I know the more the more you have used your card, you obviously maybe not maxed out, but the more you get closer where you've got a lot more credit out there, that credit utilization number increases, and that is one of the factors of your score. So if you've been using your card a lot and you're really just paying the minimum, your balances are getting higher, and you might notice that your score could drop a point or two, which a point or two really isn't that big a deal, but it'll keep changing based on how you do that. Okay, here's another question. My son is just starting out and I want him to get a credit card, but would like him to start with a small credit limit. Do you have any recommendations on a card for him to start out with? Well, what I've always told my adult children, not that they've listened to me, I usually recommend the very first card to start with to be a gas card. So if you use the same gas station and they have a gas card, only use it for gas, pay it off. And that will get you established credit. You can add your son as a signer on your card to help, but a lot of lenders would see that it wasn't his own card. If you have an account with Avco, that you could do a $500 secured credit card. So that way, if he didn't have any credit, they still run it through the system so that he builds credit, but it's secure. And that protects the credit union, since this would be, the first time applying for credit. So those are my take on that. You have anything different, Bill?
No, I agree with all of it. I'd like to add though, I like the thought process of having your child establish something with a small balance. My daughter is 22 and recently graduated college. And she gets sent, I'm going to say, I'm not exaggerating, at least every other day, there's a credit card company sending her a pre-approval for her to sign up with. And you could see, without some common sense, a young person getting strapped with credit lines of thousands of dollars on credit cards at a young age, and then using them, not paying them off on time, and then having a large amount where they're paying interest on for, again, the next 30 years. Not a good way to go.
Yeah, it's easy to get caught up. That's why I always recommend the gas card, because really, you need to buy gas. It's a smaller amount and you pay it off on time, and that, that will build credit.
Also good with gas going up nowadays. A lot of those gas cards will get you some kind of discount typically if you're using their brand, which is nice.
Those were the questions in the chat. I don't know if anybody else has any additional questions they would like to ask.
I'd like to ask a question. Is there an age restriction on getting like a mortgage for remodeling your home, or maybe putting on an addition?
When you say, what do you mean by age restriction?
If you're in your 80s.
No, it can't be held against you. I shouldn't say the way it's written, and it's for that reason. That does not go into the calculation. It's not allowed by law.
Okay.
Now,
Thank you.
creditworthiness still applies, the ability to pay it back, etc. But age, no. As long as you
Okay,
have a
thank
legal
you.
age. You're welcome.
Any other questions?
Going once, going twice.
Well, I want to thank you all for joining us for the meeting tonight, and hope to see you at a future session. I will send an email out with the presentation and a link to the recording on Friday. And obviously, if you have any other questions about, anything APCO, you have my contacts information, so don't hesitate to reach out. All right, thank you, Bill.
You're
Great.
welcome. Thank you, everyone.
Thank you.
Thank you. Thank you.